Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day after a nice long vacation, 3 days off. No market yesterday. It was closed for Juneteenth. I hope you all had a great weekend and are ready for the week, and I hope your week started off with a bang. A lot of green in the market, a lot of stocks up today. We did take a look and we found Stanley Black & Decker was one of the few that was down and looked like it might be in fair value territory. So let's take a look at that. As you can see here, you want to know more information about them, go to www.stanleyblackanddecker.com. Stanley Black & Decker in 1843, Frederick Stanley started a small shop in New Britain, Connecticut to manufacture bolts, hinges, and other hardware of high quality from wrought iron. In 1910, Duncan Black and Alonzo Decker started their shop in Baltimore, Maryland, and 6 years later obtained the world's first patent for a portable power tool. Over the years, the two companies amassed an unparalleled family of iconic brands and trusted products. In 2019, they came together as Stanley Black & Decker, a leading global diversified industrial known for superior quality, continual innovation, and rigorous operational discipline. We remain driven by a passion for excellence and a commitment to serve the builders, makers, and protectors of the world. So been around for a long time, since 1843. They do have a lot of brands. Again, Stanley, Black & Decker, obviously two brands, Biotech, DeWalt, Craftsman, Mag Tools, quite a few others. You probably worked with them if you work in the construction industry, or if you work on cars or that sort of thing, you may have worked with Craftsman tools as well. So if you are a worker, more than likely you have touched or used or utilized one of their tools to do your job. As you can see, Stanley Black & Decker, ticker SWK, they are in the industrial sector. They were down 0.58% today, so just about 0.5%. Close of business, $102.65 per share. Their 52-week range as low as $100.13, as high as $210.92. So they are definitely closer to that 52-week low currently. They have a market cap of $15.497 billion, a beta of 1.37, so they are more volatile than the overall market. You can see that volatility here. They started out the day over 105, ended the day at 102.65. They do have a pretty low PE ratio, 12.35. They have a forward dividend of $3.16 paid annually. They do pay out quarterly, so divide that by 4. That'll tell you what your quarterly payouts would be, and a yield of 3.06%. So a nice yield, not the lowest, not the highest, but pretty nice at over 3%. Ex-dividend date was June 6th, so if you buy them now, you will not get the next dividend, but you'd get the one after that. And Yahoo Finance, where I pulled this information from, not affiliated with Yahoo Finance, just one of the sources I like to pull information from. They have a one-year estimated target of $155.71. Let's take a look at what some other analysts have to say. According to the 26 stock analysts at stockanalysis.com, to take a look at this, they call it a buy. Right there, actually on the edge of hold. The yellow would be hold and buy, so just over the buy target. They have a low estimate of $111.10, which would be, actually it's currently lower than what their lowest estimate was. So if it hit their low, which would be higher than where it currently sits, that'd be $111.10, which would be an 8.23% increase in stock price. If it hit the average, it'd be $158.83, which would be a $54.73% increase in stock price, which would be close to what Yahoo Finance had them around 155, it said. And then if it hit the high, this would be back above its 52-week high, over $210. They say $214.20. Well, that would be a 108.67% upside from where it currently sits. I don't know that it's going to hit that in the next year, especially if we continue to be in high inflationary times. Typically, stocks like this do drop in times like that. Apologies for whatever that is, either an ambulance or the police driving by, but I can't do much about the noise outside. I shoot these in my garage, so apologies if there's some loud noises out in the background. So Stock Analysis has it as a buy right there on the edge, and Yahoo Finance has it as a pretty good buy too. It is definitely down closer to the 52-week low. I don't know. This is one that I might watch to see if there are further pullbacks. Again, we are in high inflationary times, pending recession. If we're not already in a recession, I tend to believe we've been in a recession since 2019. I don't need the government to tell me we've been in a recession after we've been in one for months or years. I just look around and see what's going on, and really the only thing in my mind that kept us propped up was stimulus from the Fed. So now that that's gone, I think you're going to see what the real market conditions are, and we'll go from there. But these consumer discretionary industrials, they tend to not weather very well in high inflationary and recessionary times. So again, this is one I might look to pull back further, but it is definitely at its 52-week low, and according to these stock people who have taken a look at the stock analysts, they consider it a buy currently. So if it's one you like, don't have maybe this sector in your portfolio, I guess there's worse ones out there to buy, but I still believe there are some better values currently. Stuff like Intel, in my mind, presents a better value than this one, but it is one I'm watching. I'd love it under, let's say, $95 per share, I think is about what I had it. But again, do your own due diligence, figure out the price entry for you. And that's it. These are quick hitters, guys. So Stanley Black & Decker, one you might want to keep an eye on. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Don't forget to drop a comment down below and let me know what you think. I do personally read and respond to all the comments. I'm always interested to read your questions, opinions, suggestions for future videos, or constructive criticisms. If there's things you guys don't like and want to make some suggestions of things I could do differently, that's great as well. I'll answer those at my will. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you in the next one. Thanks for stopping by, and have a great week. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.